Hi, this is Kerry Artek with Artek Advisory, and this is the AgriTalk video supplement for AgriTalk PM Monday, August 9th, in which I cover three markets: September heating oil, November soybeans, and September ethanol. Before I jump into the charts, I would really encourage you to fill out the free trial form on the website. Take advantage of my 2 weeks. No questions asked, no credit cards, a name, an email address, preferably a phone number. I could then reach out to you kind of halfway through your free trial. You could ask questions. We could talk about your trading, your hedging needs, big picture analysis all the way down to the day itself. And then after 2 weeks, of course, I follow up with a phone call to see if you'd like to become a regular monthly subscriber. No pressure. If you're interested, great. It's a month-to-month commitment thereafter. And if you're not interested, so be it. Now, maybe you'll become interested later. But I put these videos out, and I'm on the show because obviously my intention is to generate new business. And if you've not had a free trial in 6 months, I allow a new free trial every 6 months, 2 full weeks of analysis, no questions asked, no cost to you, no skin off your back or mine, and you'll get the full assortment of the daily newsletters that I put out each and every day, along with the audio recordings. I do a fair amount of audio recordings for each newsletter, several minutes each. So not only are you reading the newsletter and taking a look at the support and resistance levels, but you're hearing my commentary about each individual market. So let's jump into Monday's markets. We'll start out with heating oil itself. Presently, the September contract. In early February, on the show itself, I think it was in later February, I had been mentioning this long-term buy signal that played out following the settlement in early February above the speed line that's projected off the all-time 2008 high. And at that point in time, I was anticipating this as a price target. Excuse me. It's at 2.3288 this week. I don't see us testing it this week, but I still think it's in reach between now and, say, the end of September. It is a long-term ceiling that can contain buying well into next year, and from here the market can fall back. It's already putting out a bit of a rounding top, but I don't have a sell signal to the downside right now. That would come if we settled this week below 1.9945. This is an intermediate channel structure that can actually absorb selling into September trade, and holding above 1.9945, that 2.3288 long-term resistance area is in reach over the next couple of months, where once again we can tap out well into next year. If we close this week below 1.9945, then expect 1 to 3 weeks bearish continuation down into the upper 170s, low 180s, 1.7821, 1.7821 to 1.8095. This range of support is longer term in scope. Once again, it's kind of a 2 to 3 week target. If we close this week below 1.9945, the 1.7821 to 1.8095 area, able to absorb selling through the rest of the year. This area is nothing more than a rising channel structure off the last year and a half of trade, along with a rising trend defining 1/3 speed line that is projected off the April 2020 low. And so this area able to contain selling through the rest of the year. So if we tested it by the end of August, for instance, and once again, not expecting it unless we close below 1.9945, but if we do test it over the next few weeks, able to contain selling through the rest of the year. And once we test it, the market can stabilize, round up to this 2.3288 level over the following 2 to 3 months. Now, if we close below 1.7821, and this is rising on a week-by-week basis, if we close below it at the end of any week, good annual high. The next several months then expected to fall all the way into the lower 1.20s. This rising 2/3 speed line would become an objective if we settled below the rising 1/3 speed line at 1.7821. But just to summarize right now, between now and the end of September, decent base of support at 1.9945, still anticipating that 2.3288 long-term resistance area over the next month or two, where we can top out well into next year. And inversely, if we were to close above this, Pretty solid longer-term buy signal. I'm not prepared to tell you what that target is because I haven't actually done the homework yet, but just know that as we approach this resistance area, I'll probably do another heating oil commentary on the show itself. Soybeans, November. Weekly chart, weekly continuation chart, the stringing together of previous contracts. We had a sell signal a couple of months ago when we settled the week below this 1448.5 rising 1/3 speed line. The objective then became, and still is, 1129.25. With the contraction and volatility recently, I've gone from a 2 to 3 month downside objective to more like a 3 to 5 month downside objective. In other words, by the end of the year, the broader soybean market should fall into the 1120s. 1129.25 is what I deem the new floor of long-term support for the broader soybean market. It comprises activity that goes back 5 or 6 years, a former channel top. It can, once tested, contain selling through next year. And once again, it remains a 3 to 5 month target below 1448.5. Now, nearer term with regard to the soybeans, I'm going to be looking at a November only weekly chart. And we've got decent support this week at 1292, even dropping ever so gradually. This channel structure can absorb selling through August. And once tested, the market could muster a 3 to 5 week, 2 to 3 month rally back to 1448.5 long-term resistance. Once again, that long-term speed line here. But at some point, I am expecting a settlement below 1292, even just because of the heavy dynamic below 1448.5 and the fact that I'm ultimately expecting 1129.25 by the end of the year. So if we close below 1292 even at the end of this week, then I think the next 2 to 3 months or less, probably more like 3 to 5 weeks, we should then reach 1129.25. In fact, on the way down, closing below, once again, this 1292 structure, there's also a descending channel bottom presently at 1157.75 that merges with 1129.25 by the end of August. So this is a significant zone of support that can absorb selling not only through the rest of the year, but possibly well into next. It is an objective by the end of the year below 1448.5, and it becomes accelerated if we close this week below 1292 even. And finally, ethanol. An illiquid market for the most part, but I know some of you, especially you grain growers, are tuned into it. Back in, I was mentioning this last winter when we settled above this channel top. I had an initial target. I could actually draw it right now. And my ultimate target actually was this channel top that we hop, skipped, and jumped right over. And I haven't been talking about this on the show lately, so this was all sort of missed in recent weeks. But what has happened is the market has nearly tested a much more significant long-term resistance area at 2.411 this week. And once again, this is the September contract. This is a continuation chart. When we roll to October, October will inherit these levels. And what I like about this channel top is it basically includes all of the structure of the ethanol contract following this 2.860 all-time high that was put out in 2008. So if you follow this high, the low following that high is the low in which it's based, which is correct procedure against this most recent low, against the intermediate high. This encompasses pretty much all the extreme technicals for ethanol over the last 15, 16 years or so, 2008, 13, 14 years or so. Anyway, bottom line, 2.411, significant overhead ceiling. We came very close to testing it in late June, and having done so, no surprise to me this market's beginning to fall off. I do think that this 1.454 is not out of the question. By the end of the year, I'm not sure. Let's talk about that right now. There is a rising channel bottom that this week is at 2.089, rising 0.022 a week. It can contain monthly selling pressures. Once we test it, ethanol can rally back up to this 2.411 long-term ceiling. But if we close below 2.089, I think we're just a few months away from falling all the way back to that 1.454 level. This is not altogether different than the broader corn futures market as well, and it's also in line, obviously, with crude oil and the other competing energies that ethanol is a part of. But I don't want to get too far into intermarket analysis. Bottom line here, 2.411 can contain buying through next year, and below which we should, between now and the end of next year, fall all the way back into, really, it's kind of a zone. It begins in the 1.7s, 1.75 down to 1.45, really. But 1.454 is long-term support, and I think a 2 to 3 month objective, lickety split if we settle this week below 2.089. And that's really all that needs to be said for this particular AgriTalk video supplement for Monday's show, August 9th.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.